Hi, this is Ian Coleman from PIA First. This is this week's video analysis for the week 10th of September 2018. We're going to concentrate on the dollar index this week, highlighting both what we believe is going to happen over the medium to long term and also the short term. And then we're going to break down through the various majors to highlight prime patterns and support and resistance levels going into this week. So what's relevant with the dollar index? Well, here we posted on the week 13th of August, all the initial rally was overturned, and this single candle pattern is called an inverted hammer. Now the fact that we've got some follow through selling there, and we've now got a free candle pattern, and this is known as an evening star formation. Now we often see those at the top of a trend, so the medium term bias has flipped to the downside. However, we've also seen, if we look for the last 2 weeks, we've seen spikes in both directions. We've also seen a doji style candle from the low, so there's still scope for a bit of upside movement going into this week before we see further selling pressure, we believe. Now, if we go to this weekly chart, we can see why we saw some stalling on the initial rally. We've got a Marubozu level at 95.65. Let's just drop this off for a minute. And that is the midpoint from the open and the close of this week's candle. So we did see a bit of stalling in price action to the upside. If we go to the daily chart, here we can see that what we believe to be the completion of the first 5-wave pattern. So we're now expecting quite a choppy 3-wave pattern to the downside. If we look to Friday's candle, so we'll just zoom in on that a little bit. This candle is a bullish engulfing candle. So basically we've made a new low, and then buyers have returned, and it's completely engulfed Thursday's candle. Now that's quite a strong bullish signal, so there is ample scope for further dollar buying at the beginning of the week. And if we go into this time frame, which is the 4-hour chart, here we can see a morning doji star and then this strong move to the upside. We're expecting the previous high to be taken out, and we're looking for an AB equals CD formation to the upside. This is quite an interesting area, 96 the figure. At the moment it's the top of the corrective channel formation, and also a 61.8% pullback level from here. So we're looking for the immediate bias to be bullish in the dollar, but then we're going to be looking at selling into rallies next, probably the latter end of next week. So mixed volatile trading expected. Over the medium term, and if we go back to this chart, so basically we're looking for some upside movement, and then we're looking for a larger correction to the downside. This can now also be seen in 5 waves, and then we're expecting a 3-wave pattern, and then potentially another 5-wave pattern to the upside. Now, the reason we had that arrow on here before is because we believe that this area, which is the 61.8% pullback around about 91.59, with it being close to a previous swing low, is going to be quite prime. So if we project that, so in other words AB again, BC, and then CD, that goes up to around about 10020. Why is that significant? Well, firstly, it's a big figure, 10000, and then if we go to the other weekly chart, we can note around here is previous resistance, and it's also a 78.6% pullback level. So it sounds quite confusing at the moment, but intraday we're expecting buying in the dollar, or dip buying in the dollar, but for that to be limited, and then we're looking for a move further down in the dollar towards, where are we? Towards this sort of level, 91.60, and then we're looking for buyers to return. Obviously this is a corrective formation, so expect it to be mixed, expect it to be volatile, expect this trend line in the 38.2% pullback level to probably form some sort of reaction, but are we really going to be have to be on our toes and really looking at a quite decent confirmation of buyers returning? So if we reflect that dollar bias back onto the FX majors, and we're only really going to look at short time frames because that's what we think is going to be relevant for this week. Here we've got euro dollar. We had some bespoke resistance on Friday. If you saw the Friday triggers, we were looking to get short at 116.65. We didn't get there. We've started to have that move down in euro dollar. So obviously stronger dollar means weaker euro dollar. Okay, because the euro is weakening while the dollar is strengthening. Towards the beginning of this week, bespoke resistance is still located at 116.65, but we've also got some bespoke resistance at 116. The figure, what we're looking for is the opposite of the dollar index. In other words, an AB CD formation to the downside. 114.60 is a full target level. If we put a fib retracement on, it's very close to the 61.8% pullback. So this is the prime target area for the beginning of the week. Cable, we're lucky enough to clip a cable short on Friday. We don't expect the sell-off to be as strong in sterling dollar. 129.80 is resistance at the beginning of the week. An ABCD formation takes us to here, which is around about 127.78, which is just below the previous swing low. Dollar Swiss slightly different. A very impulsive move to the downside. We've seen obviously selling in Euro Swiss and Sterling Swiss, where there's no clear indication that that's coming to an end. However, we could see a decent recovery in dollar Swiss at the beginning of next week, as we don't really have anything in the way of resistance until 97.85, which is our bespoke resistance. It's also a previous swing low. So basically what happens here, this was support, and then as we go up to attack that level again, it becomes resistance. So this is our prime short area, if you like, for the dollar index. Sorry, not the dollar index, dollar Swiss going into next week. Dollar yen, a little bit harder to decipher. We did talk about an ending wedge formation. So we've seen sort of mixed volatile price action. Let's just put the measuring tool on. Sort of 17 days, so just over 3 weeks, 3 trading weeks anyway. Then we broke the wedge to the downside. We then retested the wedge. We're now in between bespoke support and resistance. So we've got bespoke resistance at 111.07, which is just about where we closed on Friday. Be interesting to see the Monday open or the Sunday night open. And then we've got bespoke support at 110.58. However, we've got to give this currency pair a bearish bias, as the measure move target for the wedge breakout is here, which is 109.80. So yeah, selling into intraday rallies, but signals aren't particularly strong in dollar yen. It should be noted that euro yen, we've got a downward bias going into this week, but that could be produced in proportion to euro weakness as opposed to yen strength. Dollar CAD, and this is actually bucking the view on the dollar index, and we'd actually look to buy dips in dollar CAD at the beginning of the week. 131.01 is our bespoke support, very close to the 38.2% pullback level, and then 130.60 is our second bespoke support, and then we've got this channel support of what could potentially be a bullish reverse head and shoulders pattern at 130.35. Aussie dollar just keeps on moving to the downside. The fundamentals are sort of pushing it lower. Aggressive sell-off on Friday, broken the wedge formation to the downside, so it's invalidated this pattern basically. To the upside, we haven't really got anything in the way of resistance until 72.41, which is pretty pivotal level. So we're expecting that to be strong, but I don't know how much of a correction we're going to get from Friday's strong sell-off. Euro sterling, again we've got a wedge breakout. This time it's an expanding wedge breakout. So if we just pull the measuring tool on again, 35 days of mixed and volatile trading, strong sell-off here. If we go to the weekly chart, we can actually see, I think, the Maribuzo level holding quite well. Go back to the daily chart. So we've broken the wedge to the downside. Measured move targets 88.55. To the upside, we've got reverse trendline resistance at 89.60. Relevant for us going into next week, as we've got our bespoke resistance at 89.60. So we're looking for rallies to be limited, and we would look to sell into euro sterling strength next week. Now euro yen, like we said, the bias is to the downside for us. Impulse move to the upside, and then this choppy corrective move lower. Let's just expand that chart a little bit. We've got bespoke resistance at 129 the figure. We've seen sort of spikes in both directions at the latter end of last week, so there is scope for some an upside correction. Remember, this is a corrective formation, so we can expect it to be mixed and volatile. Okay, good luck going into next week, and we'll keep you informed with what we're seeing. Thanks very much. Bye.